Hello, hello, hello. Today is August 29th, which means we're going to do a month-end recap of our Roth IRA portfolio and Robinhood. So currently the portfolio stands at $21,000, 317 and 58 cents. Really tough day today, down 0.96%. That's $205, so doesn't feel good. But if we look, we're only down 0.24% for the week, which is only 50 bucks. And if we look for the month, we're actually up 0.8%, which is $170, and 0.8% in any given month is pretty good. So although it could have ended higher, and we definitely had some high points, you can see over here we're touching 21,500. We're at some really good spots, and I was hoping we'd stay here month end so we'd have a good report, but nonetheless, it came down a little bit, and we'll get into that. Look at 3 months, 9.67%. Year to date, up 12%. 1 year, up 18%, and all time, since I moved over to Robinhood, up 24%. And we'll get into specific numbers from past brokerages later in the video, but for now, pretty good results, nothing to complain about, up $4,000 since I moved over to Robinhood. Very happy with that. If we look, we have two positions, QQQM, which is less expensive for their expense ratio than QQQ, 55.15 shares, which is almost $13,000 worth of equity. And then VU, we have 14.12 shares, which is $8,373. If we go down here, contributions, we're so far at for the year 1,600, staying very good. We're doing 100 on every single Monday. Might up that a little bit, or might just do some discretionary investing, some additional funds when I have them, just so we can hit that annual goal of maxing out our Roth IRA. So you can see that Robinhood, with their 3% match in gold, has given us $48 to work with. So that's great. Whenever I get that match, I just put in VU basically to keep everything balanced out. And you can see that we can still provide $5,400 more dollars. And maybe in the next video we'll get into it, but we'll see how on pace we are with that and what we have to do to kind of make that happen by the time next tax year rolls around. So doing very good with it. Happy with the results here. Now let's get into some news. So the general news that spiked up for the month, might be able to see it on here, probably around this part, is that Jerome Powell had a speech, and he kind of hinted at the fact that rate cuts might be on the horizon. If you look at this article from CNN, perhaps, they did just state that from economic conditions that this might be happening. Okay, it's not going to load, that's fine. So if we look, some economic conditions such as the labor market kind of having issues at the time, it's comfortable in the fact that people aren't getting fired, but people aren't getting hired. So it's kind of an odd spot. And at the same time, inflation is kind of hot. So the issue is that we're concerned about the labor market. I mean, we're concerned about national debt and interest that accrues on that, mortgage rates, those things we're concerned about. But at the same time, we're very concerned about inflation. So it's in a really weird position. But if you were to look at the betting odds on it, it seems more than likely that next meeting there will be a quarter of a percent rate cut, which would be good to see. For my future plans, it'd be nice if mortgage rates came down. So definitely not complaining about that. Let's see, I did want to point out something interesting I saw. It wasn't very announced on Robinhood, but I looked through these gold perks on the occasion. We can see that they're teasing the idea of mortgage rates, which is something that I've been waiting for them to do. But interesting enough, it's not through Robinhood. Robinhood isn't financing your home, which is interesting. I thought they were kind of getting into that factor. Maybe they're not big enough because maybe they thought the demand would be just too much for them to handle with their current assets, which makes sense. It seems that they're partnering up with Sage Homes. Yeah, Sage Home Loans. So you can see that the national average right now is 6.5%. They say that with the gold you get 5.75%. So you're saving 0.75% on your interest rate, which is great. But when I was looking up Sage Home Loans by itself, I was seeing about a 5.8. So, I mean, if you save 0.05%, that's not nothing, I'll be honest, especially when you have a higher home value. Over time, that adds up. So, I'm not complaining about that, but it's slightly false advertised. But if you can go through Robinhood, have everything in one place, which I think this is going to tie into their banking come fall, and we'll see when that update comes. We'll make a whole video about it. it'll be nice and convenient just to have everything in one spot, and they're going to have a net worth tracker too. So I mean, you can see that you have estimated lifetime savings with that 0.75% percentage saving on your APR, not even APY, let's keep that in mind, but your APR. And you can see some estimated life savings. So it is interesting, and obviously this is going to depend on creditworthiness, but from the credit score ranges that I was seeing, I'm not too concerned about it. I think I would qualify for this, so it's something that's very interesting to see. Something else that I did kind of want to point out here. If you go into futures, you look at the future list. Now let's go over to metals. Yeah. So they added a new future contract, which this is very interesting. It's kind of something that I was more interested in. So it's called 1 ounce gold futures. And hopefully, because they're kind of floating the idea, this will be turned into some sort of perpetual future that doesn't have a set date for the ending of the contract. But you can see that you can get 1 ounce of gold for $165 worth of margin. Now, I've kind of made the point that with Robinhood Gold, you get $1,000 free of margin. So there's really no margin expense to this. You can see it's a multiplier of 1. So this leverage comes from the fact that the gold price is 21 times the margin requirement. This moves by ticks of a quarter, and the tick value is worth a quarter. So there's no multiplier to the tick movement, but you'll see the leverage just comes from the fact that you get 21 times the value with margin. So currently at this point in where my assets are at, I don't think this is a good decision. It's a lot of risk just based solely on the amount of money that I have. But down the road, this is something that's very interesting to me. I think if you can get access to 1 ounce of gold for only having $165 on the line, and it would be interest free because I'm a Robinhood Gold partner, this could be something as an inflation hedge or just to get extra returns, if that makes sense. Mainly because I already have that money put in short-term treasury bonds through Robinhood. So if I could position some of that over to a 1 ounce gold future, that might actually pay off decent. So I'm kind of interested in that. I mean, you can see if I had this in the last week, I would have made $144 off of just having $165. So that'd almost be an entire 100% return. If we keep going further out, I mean, you can see the 3 months rocky, but looking at the 1 year, I would have made $228 by holding this contract. But then again, this is only going from May 2025, so I would have made a lot more if you look at gold price. But the point being, this is a way to access potential gains by leveraging margin. And I think it's in a semi-responsible way. I'm not betting on stock movement, but rather gold. And I got to kind of evaluate the deviation of pricing and see what the risk is there. But it's something on my mind, so it's something I'm going to look at. Let's get into some of our investing account here. So if you look at our portfolio value, you can see that we're currently standing at about 21,324. 14,145 of that would be contributions. And if we're going to compare our value to the SPY, if we compared buying every single thing we bought, but rather putting it into SPY, it's 20,847. And we can see some comparisons over here. First, the portfolio profit stands at $7,179. That's an all-time high. We love to see that. And that's up from last month at $6,800. So we made about $300 more in the last month. Now, if you look at our difference between SPY and our account, you'll see that it went down from last month. We were beating the market by $533, and now we're only beating it by $470. But the point is that it's still incredibly good. Outperforming the market to any degree is an accomplishment on my part. I took on higher beta with QQQ, QQQM, and it seems like it's paying off. So I'm pretty happy with that. I did kind of make this tool down here. It's going to make analysis for some stocks I want to talk about a little easier in the future. So I did first want to look at NVIDIA. So let's look at the price of NVIDIA, look at 1 year, 30-day moving average on this. NVIDIA recently kind of dropped in price, and that was because they missed slightly on their year-over-year revenue growth. Now, granted, it was still amazing. It was a lot of revenue growth, which was expected, but it's already priced in. And the fact they missed even by a little bit shook up the market. They dropped like 3% in a day. We can see that drop right here. And then they kind of regained it a little bit and then dropped again. So Robinhood they had a lot of good news on this, but it's like, I don't know. I've kind of expressed my concern with NVIDIA. They're currently the largest company in the world. But you can see that in the last month, I mean, it's just been shaky. If you look at 3 months, they should be up at least. Yeah, they should be up, but we've just kind of seen a continual slowing of growth continuing over time. And you can kind of see that in this last year. I mean, there was appreciation, but if we're going to compare it to, let's say, I don't know, like 3 years-ish, you can see that growth is slowing down. We can kind of see a level out point happening here. So it's not just straight parabolic growth over time. It seems to be steadying out, which is concerning for a lot of people because everyone thought video would just continue to go up forever. But then again, if we look at the large chart, you can see a slowdown period here and a large drop, and it still came back up. And granted, this was a lot of tariff news going on, but still, point being, there could be more growth. It's not like it's leveling out. This is the first time it's ever done this. No, we've seen trends like this in NVIDIA stock price, but it is potentially concerning. And that they also announced 2 of their main revenue drivers. They said that spending is kind of iffy on it, and they'll say mystery man, we don't know who it is, but reality it's Facebook and Microsoft that buy the large amount of GPUs. Now, an issue with that is when they buy these GPUs, they see it as a long-term investment that's going to help them in the future with their data centers and processing AI requests, their tokens with it. But reality, the technology is depreciating faster because it's evolving faster. So instead of these GPUs lasting maybe 10 years, right, as they expect, it might only be lasting 2 to 3 years because the technology is so revolving that all the chips and GPUs that they're buying right now become obsolete in a shorter time than expected. And if that's the case, spending slows down. Because why would you spend $50 billion if it's going to be worth 0 in 3 years? I mean, you can do a cost risk analysis on that, but to be quite frank, not a lot of companies are going to bite on that. So let's look at Apple. Apple, it's been interesting lately. We can see a lot of like kind of relaxing on the price. It's like a 30-day moving average. So you can see that price has relaxed quite a bit since early 2025. Okay, some news they announced recently was that they might be using Gemini for Siri, which is pretty big. Apple was kind of making the point that everything's going to be in-house and with collaboration with ChatGPT when it comes to Siri, but now they're kind of floating the idea of Gemini. And this gets to the point, and kind of what I was saying earlier, where Apple's kind of concerned about that depreciation with buying chips and GPUs from NVIDIA, so they kind of held back a little bit. They don't have as much chips as everybody else. They're kind of relying now on Gemini, for example. So it's not necessarily a bad move of Apple, but it's not a favorable one for stock-wise. People want to see that spending and not see that hesitation, because if you hesitate too long on something like AI and chips, you might be falling greatly behind. So Apple is concerning. Oracle had some news recently, yeah. And we might want to lower the time frame here because just like NVIDIA, you're going to lose a lot of that by seeing the growth. So in the last couple of days, Oracle has dropped quite a bit. We had I think it was about a 7-8% decline in pricing. We can see that they were floating at a price at 256, and now they're at 234. So almost 10% drop in price, about 9-8. This became because Oracle announced a 10% layoff in their cloud sector of employees. And this isn't because they're struggling with solvency or anything like that. It's more of their AI play where they think they can replace a lot of their workers with AI, have their work done in faster methods, have less staff to the same amount of work. And that might be the case, but I think generally when you're laying off workers, the stock market just kind of hates to see that, to be quite frank. I mean, even if it's strategic and for a good cause and going to up your bottom line, no one wants to see that 10% of one of your fastest growing segments and kind of the main thing of your company is going to be slowing down. So that's concerning. Now let's look at Palantir. And this Palantir kind of represents a more general trend in the market right now. So let's look at maybe 1 year of data. Okay, we can see that looking at this, Palantir was kind of at their peak here at 186, and they recently went down to 156. So they lost 15% of their value from their all-time high. And why did that come? Well, they had some earnings, and I think they fell a little bit below expectations, but they kind of represent a more general, broad concern in the market that AI plays are overvalued, that maybe we're getting a little too lofty on our evaluations with AI. And Palantir is very much an AI company. They use AI to help government contracts with security. And I mean, with war concerns, obviously, they're really showing out with that. But the issue is their technology, is it really going to make them stand out as much? And if it didn't make them stand out, if it's not going to make them stand out as much, that's a big concern for their bottom line. And especially because they're trading at just such a lofty PE ratio. People are expecting the growth to be not even exponential, but parabolic, just straight up line. You might as well not see the chart. People are expecting the revenue to grow fast, the bottom line, the top line, all to grow fast. And if AI isn't all it's cracked up to be, Palantir is in a really bad spot, but I guess we'll see on that. And one of the last that I wanted to look at for today. So we're going to look at Adobe. This is a stock I recently did a video on. And in that video, I talked about the pricing of Adobe. You can see their current price down here. Let's see. We're trading at about, keep catching the moving average on this, but let's say 350. More or less trading at 350. I did a discounted cash flow analysis on it, and it seems like $515 is fair value. So you can see, and let's maybe look at the last month here. If you're looking at the last month, they stayed about the same, 364 to, I don't know, 356. So down a little bit, and I kind of like to see that personally. I said that I find the valuation of Adobe very attracting. It's very undervalued for the cash flows it's putting out. Very established company. But to be quite frank, there are a lot of AI concerns. There's a lot of competitors coming out with video creation, photo creation, video editing, especially caption editing. I mean, you've seen captions, Opus Clips. I mean, you got ChatGPT, you got VO with Gemini. All these models coming out that can seemingly do a similar job to Adobe, maybe for a fraction of the cost. I do think Adobe provides value, as in you get the whole suite for a, not the cheapest price, but for the amount of value that you get, it is a fair price. So this is something I'm just going to continue to keep an eye on every single month, and I think we'll keep reporting on it. So they're trading at 350. I think if it started hitting like 320, go even lower, like 10% lower, people are getting really bearish on it. I'm going to reevaluate it, see kind of what the sentiment's coming from. If I don't find the sentiment compelling on Adobe, I think this could be a stock I buy. And I don't buy stocks very often. But after doing my analysis, and then I compared it to Morningstar's too, and I seem to be quite in line with a lot of things. I'm pretty bullish on the company as a whole. I mean, let's take a second, look at some maybe larger trends on it. Okay, well that's not very reaffirming, let's be honest. But looking at 3 years, we can see it's traded kind of flat. And this makes sense due to AI. So AI was kind of getting bigger in 2022, 2023, so let's go further out. Adobe is a very established company, but it seems like they've been struggling. So let's keep it quite frank. They peaked in 2021 over here at 670. If we're saying 515 is fair value, you can kind of see these ebbs and flows. I mean, we saw a low of $270. This would have been a great point to buy, even compared to now's price, and it went up to 620. So even if it's fluctuating kind of a lot, it seems like there's not that growth coming out, I think you can buy this company at fairly attractive pricings. And if you analyze the revenues fair enough, I think you could buy in below fair value, and it's going to retain that. So I mean, currently I have a 30-day moving average. Let's see about a 90-day. So we kind of see these larger trends of price movement. So let's keep going up. I kind of want to see just where this is floating around. 150. Okay. So we kind of follow this. It does seem like it's kind of floating around this point right here. And if we're going to compare, that's 470, 480. If you want to get, talk about resistance or something like that, it seems to be bouncing off about 400. So if it's currently trading at 350, that's about 17. 16, 15% upside currently if you want to talk about resistance point bouncing. But if we're not going to talk about that, and keep it a little more serious, I just think it's undervalued. And I mean, yeah, we could talk about moving averages and keep seeing where it's bouncing off of, but it does seem kind of where it's floating around that if we're looking at just a plain old average of it. So I think there's a lot of upside in it. Something I was curious. Let's look at Palantir. Let's look at their trading volume. So, well, I got you guys here. See how the trading volume has been recently. Yeah, it seems like less spikes, which is kind of what I was expecting. You can kind of see a lot of hype going here. But yeah, I mean, even it's been trading down. So I should make a thing to see net volume trading, see positive, negatives of trades. But yeah, so Palantir has been incredibly interesting lately. Look at our positions here, just kind of sum up everything. Talked about our equity that we got on QQQM and VU. QQQM is at 26% change, VU at 22%. But if we're going to look, we're at overall 50.75% gain on our contributions in this account. But we made those over time and it wasn't all at once. So we rode a wave of a lot of gains in the market. So very happy with this. We see we're at our about 40% VU, 60% QQQM split. So very happy with that. Tap into our predictions really quick. Maybe we talked about the gas prediction at the end of last month, maybe not, but we can see that we've been making pretty good predictions over time. Haven't really been too involved in this, but want to take a second look because we were having pretty good success with it. Had a lot of winners, so I'm feeling very good about that. Overall, this month, it might have been a little shaky, but I'm happy with the results nonetheless. I'm happy to make any money. 0.8% in a month seems great to me. We're going to try to up our contributions in this account, get a little more bullish on it, especially if sentiment's getting lower. That's when we want to buy. So happy with that. We're going to keep an eye on Adobe. We're going to have another stock review in the middle of the month. If you have any suggestions, please let me know. Otherwise, I'll be fueling some from my Discord. So thank you all for watching. I appreciate it greatly, and I will see you guys in about 15 days for the stock review. Take care.